Yo, what is up, guys? Welcome back to another video. Driving to Silver Lake. Sunset is nice and pretty, so thought I would make a video. So, a lot of stuff is happening right now in the world. A lot of scary stuff. As I'm recording this right now, we're having a stupid war in Iran. The stock market is down, and I'm not going to talk about politics on this channel. Maybe I will in the future, but the point of this channel right now is to kind of just talk about personal finance and whatnot. So, of course, going to have to talk about the stock market and how it's been down a decent, not a lot, but a decent amount. I think year to date, S&P 500 is down 6%. So obviously not good at all. And the point of this video is just to kind of talk about it. I know a lot of people right now are probably pretty scared, getting pretty anxious. If you're checking your portfolio, you're seeing that you're down, I don't know, $5,000, $10,000. It's not a good feeling, right? So, I'm sure a lot of people are getting anxious, wanting to maybe sell. I'm here to tell you to not do that. That's the worst thing you can do. Do not sell any of your stocks. Unless you are 65 and you're watching my video, then maybe, I don't know, I would ask your financial advisor, I'm not sure. But if you're in your 20s, my advice is honestly just stop. Like, don't check every single day, That's like that's my number one advice is there's no point checking every single day. Like, who cares, right? Obviously the stock market is going to go down. It's not always going to go up. So there's really no point in seeing how much money you've lost, because you didn't actually lose any of that money. Shit, I went the wrong way. You didn't actually lose any of that money unless you sell it. And unless you need the money right now, there's really no reason for you to be selling it. So yeah, just stop checking. Second, just kind of reframe, your view of investing, I guess. When the economy crashes, or, when the stock market crashes, that's really when most people make most of their returns, because, through your 401k, you're slowly buying in every week, and you're buying at lower and lower and lower prices. So you're getting a deal, and then 20-30 years down the line, obviously the market is going to recover, hopefully, and you just now got that stock, or at the S&P 500 at a much lower rate. So these market downturns are actually a good thing for people in their 20s, because it gives us, I have no idea what exit I'm taking. Oh, wait, what the fuck? Okay. It's a good thing, because it allows you to buy more. You get stocks at a discount, right? I think that's one way to think about it is, every time the market goes down, it's almost like there's a flash sale. It's a discount. Another way to think about it is, let's say you buy something, and let's say for a fact that this thing that you buy is going to be worth $1,000 when you sell it in 40 years. That for a fact, right? So my question is, if today's price is $200, and for a fact it's going to be $1,000, right? And suddenly it goes from $200 to, I don't know, $180. Are you going to really be freaking out that much? Because it doesn't really matter, because at the end of the day, it's going to be $1,000. It's still going to be higher. So, if you bought it at $200, it suddenly goes down to $180. Why does it matter? It's going to be $1,000, right? So that's kind of how you should think about stocks. That the stock market is going to be higher by the time you're ready to retire. So why are you so stressed about it temporarily going down, right? And using that example again, if you know it's going to be $1,000 and now it's suddenly 180, you should buy more, right? Because it's on discount. So yeah, that's kind of just like one way to think about it. So really, those are the two things. Just don't check your portfolio all the time. It's not going to help you. It's not going to help your mental health. And number two, just view it as like a sale, a discount. Think about the long term. If you can afford it, try to buy a little bit more. Obviously, it might go down more. So my advice always in these situations is to do something called DCA, which I believe stands for dollar. Yes, no, I don't believe. I know stands for dollar cost average. And the idea of dollar cost average is you buy the stocks at a recurring frequency, right? So every week, whether or not the stock prices go up or it goes down, doesn't really matter to you. You're still buying every single week. And the math shows that by doing this, you're gonna come out ahead, because you're buying during the dips, and yes, you're also buying when it's high, but it kind of evens out, right? But I think the main benefit of doing dollar cost averaging is it really takes the emotion out of investing. So, if the market is like tumbling or is like going up, you almost forget that you have a recurring investment, right? Like, let's say every week you invest $50, you set it on your app. You almost forget that you're like buying $50 worth of stock every week. And so I think that's how it takes out the emotion, of course, because you're not, because it's automatic. You're not really trying to make a decision of like, oh, like, should I buy this week because it's down, or should I not buy this week because it's high? You're not really having to make that decision. And so I think it removes also a lot of the stress out of it, right? So you do that, buy every week in combination with just not checking your portfolio. It does wonders for your mental health. It at least for me, I don't really care that much that the stock market has been down. If anything, I'm like, oh, like maybe I should buy a little bit more than my recurring investments right now. But ultimately, even if I do buy a little bit more, I know it's not going to make that much of an impact on my future retirement. So like, it doesn't make that much of a difference ultimately. But yeah, it really does remove the stress out of it, and I just don't care. Like, yeah, it's down 6%, whatever. So yeah, guys. So just relax, chill out. Don't let all the news scare you. Definitely don't go on Reddit and read people's doomsday comments about how, this time is different. People always think this time is different and the market is not going to recover. I remember during COVID when the market crashed, and honestly, I was scared shitless. I didn't sell, but I also didn't buy a lot because I truly thought the world was going to end. And honestly, I don't even blame myself for thinking that, right? Like, it was crazy. It was a crazy time. Like the entire world economy shut down, right? Like that's unprecedented. And the market recovered. The market didn't really care, honestly, but obviously I didn't know that at the time. But the important thing is that I didn't sell. I wish I bought more, but I didn't sell. So yeah, COVID happened and it was fine. And then I think there was like the 2022 crash. I think it was down like 20% year to date. So that wasn't great. Obviously didn't sell either. Bought more, if anything. And then you had the whole tariffs crash back in April. I think last year? Yeah. So people were like, yeah, this is gonna be the end. Trump is trying to destroy the US economy from within. And honestly, maybe he is. I don't know. But you know, the market recovered. So I think that's really the takeaway, is that the market's probably going to recover. And if it doesn't, we're honestly all screwed, but whatever. So anyway, that's really the point of this video. Just to tell you guys to relax, keep investing. Don't pay too much attention to the news. Don't make any stupid, rash decisions. Just trust the process, keep investing, and you guys will be okay. All right, thank you guys for watching.